Okay, so I want to finally share with you guys my trading strategy and how I manage my trades throughout the whole year. The short term stuff, the long term stuff for that 12-month basis starting every January 1st. And, simply there's a lot to it, but I'm going to break it down into a lot more detail in future videos. I want to get a lot of these out by 2026 because 2026 is going to be awesome. There's a lot of stuff I'm working on for the channel and the Discord. I've talked about it on the Discord. So I want to get a lot of these things rolling. I'm working on a lot of stuff, working on a lot of stuff in the background for the website as well. So I want to really kick off 2026 very aggressively and be a lot more active on the Discord as well. But starting today, I'm going to share with you guys the trading strategy. Again, there is a lot to it. So I'm going to do a summary video today, and then very soon I'll break down the video into more detail and cover a lot of stuff I'm talking today in their own individual videos as well. So to get started, please keep in mind though that this trading strategy is how I manage my own trades. I've been trading here's some context. I've been trading since early high school. I've been practicing a lot. It's now been like just over 10 years, and most of this time have been very, very difficult. I've had a lot of moments where it's been dark. I've been wanting to quit. I'm not seeing any progress. Because I keep reading, or not reading, but I keep making a ton of mistakes. A ton of mistakes. So many years of pretty much averaging no profit, no loss. It's just been flat. A lot of like lucky trades, a lot of terrible trades, a lot of emotional trades. Not really. And then in my early days, my trading journals were just garbage. I never followed any rules. I would set them, not follow them. It's been absolutely terrible. But then as I progress and I've been reading a lot, I've been not just reading trading and investing books, but there's a lot of books I keep them next to me, the ones that really speak to me. A lot of them just how to manage business, because I realized it's very, very important, at least to me, that you know, trading, if I start seeing it more as a business and every single transaction is like telling or making a change in the business, everything has to have a meaning, and there has to be a proper meaning behind it for every decision you make. So instead of looking at the charts and making decisions based off of that, there's a lot more I look at. So I'm always looking at economic data, jobs numbers, inflation numbers, what's really going on, how that really looks like on the overall picture, what the Federal Reserve is doing. Um, and then, of course, I also look at the Forex market because I want to know, is there any kind of flags, green flags or red flags happening possibly in the currency markets, global currencies, like, USD, yen, Aussie, and euro, and all that. I want to see if there's any red flags that pop up very easily. But yeah, economic data is super important. Headlines, what's going on. I know elections are a big deal for the market too. So I just look at a lot of these. And then primarily, I've settled with looking at fib structure, so investor sentiment, and how this aligns not just the short term picture, but the bigger picture. So I'm going to get into a lot more detail about this in other videos, but I'm just letting you guys know. My trading has really changed for the better once I started to look at it in a more of a serious business type of view, where you're actually managing a business instead of just taking trades. And it took a while to really realize that, and I'm getting a lot better when it comes to not falling into like FOMO or hype, and I'm completely eliminating those emotional trading elements out and focusing completely on value structures. But here's basically the summary of my trading strategy. And again, I will break this down into more videos soon. I would like to make at least one video of my trading strategy a week by the time we reach New Year's. So everything is like really like detailed. It's all there, and then I probably won't even make a playlist for it. It would just be out there. But I'll title it so it's easier to filter. Yeah, so we're basically gonna do this with Bitcoin. When it comes to my core position, so there's two strategies that align into one. There's two parts of it. The first part is creating and maintaining a core position for the overall year. And I've talked about core positions earlier this year. This is where the majority of your money is supposed to come from. At least for me, this is where the majority of my money is supposed to come from when it comes to just trading. Now, I'm gonna be super clear about this too. All my income does not alone come from trading. I like to invest in a lot of other kind of assets. So I invest in there's tech stocks I really enjoy holding on to. There's REITs I really enjoy holding on to that pay a nice dividend. So like Realty Income Corp. I like money market funds, depending what's going on for the yield as well. But yeah, like Realty Income Corp, amazing company in my opinion. I like their dividend. I like their management, their portfolio. I also invest in non-publicly traded REITs, for example, like this one. They have three kind of assets or categories. There's just an income REIT, which is more focused on income than growth. A growth more focused on growth than income, and then they actually have for accredited investors, you can actually look at more concentrated investment opportunities that they have. And I've been with investing. I'm not like advertising for them. They're not. This isn't any kind of like advertisement. I'm just showing you guys what I'm doing. But I really I've been looking at I've been doing a lot of research on them, and I've been invested with them for a handful of years now. And yeah, they pay. This is where I mostly invest with them from. But the income rate, they pay you a monthly dividend, overall 6%. So I like to invest with this, and I put a lot of my capital in here because I really like the passive income aspect of investing. It's sort of like a really good safety net, and I can rely on dividends usually if I trust the company more than capital gains. But when it comes to actual trading, and then of course there's physical assets that I own that also yield me income, and then some partnerships and stuff that I'm working on as well that are working on the background. So when it comes to trading, so when it comes to the core position, for example, most of the time, really, my core positions are with the S&P 500 and with Bitcoin. Sometimes, the tech index, or you can look at QQQ, or I'm gonna use this one. I don't have any things drawn on here, so it's easier to look at. So the idea here is that at the beginning of every year, I open a core position, and it can be with multiple assets. So it can be with Bitcoin, it can be with S&P 500, for example, and that's usually my two go-to. And the core position, the purpose of it is to really provide all the income you really need. It provides the majority of like they could say meat and potatoes of basically your overall profit goal for the year. And the way I determine this is, okay, so with Bitcoin, it's super easy. So the majority of my core position is usually always in Bitcoin, depending what stage we are, what year it is in the overall 4-year cycle. But it makes it very easy because if Bitcoin has like this very consistent 4-year cycle that has been going on for a while, they just look a little bit different each year. The structures are a little bit different, but the overall actual like layout is pretty much the same. It's very good to look at because there's a lot of information you can go off of. You can see how much, where Bitcoin's flowing. Is it going into what addresses is it going to? Is it going to addresses where they tend to sell very frequently? Is it going to addresses that hold quite often? You can look at a lot of info. You can look at the hash rate of a ton of large crypto mining companies, and there's a lot of information out there. But really, the purpose here is like where we are in the 4-year cycle. Is the Bitcoin price expected to provide a nice return throughout the specific year we're starting, right? So here in 2025, and just like in 2024, a large position of the core position was invested into Bitcoin because the bull market was still alive. We were definitely in a bull market, and we still are. Until it's considered otherwise. But basically, the way these core positions are managed is the asset that you're buying, the S&P, Bitcoin, whatever. is it expected to go up throughout the rest of the year? What's going to cause that? Is it actually high probability? If it is, just like this year and last, for next year, I will not have long Bitcoin core position. That's not an option for me. Depending how everything looks like in the beginning of the year, it might just be mostly into more of a yielding asset than it would be with than an actual like a growth asset. But it depends too, because my core positions can also be short positions. It just depends what's going on, and as we actually enter into next year, I'll be making videos. I'll be explaining what I'm looking at, what I'm doing, and you guys will have a better idea. But as of right now, we still have a few months left, so I want to let the year play out before I actually make any decisions for 2026 core positions. But yeah, basically, okay, so is the price expected to go higher? If yes, cool, that's the core position. And then how I manage the core position throughout the whole year is I only rebalance it usually once or twice. And I can give you guys a decent example right here. If I can kind of like separate this. So in 2024, it was quite easy because at the time, it's kind of difficult to show, but at the time I was looking for bigger picture break of structures. So at this time, on these monthly candles, it's like we broke over the last bull market high. I wanted to start locking in some profit. And then towards the end of the year when we broke, we corrected, and I was making videos during this time, and I was like, it's very highly probable we'll find support within this deep value, short-term deep value, higher low. I talk about these purple areas quite often that I draw. And then the moment we broke over this, I rebalanced it. And then I actually took a ton of this profit. I made like a video on it. I took a ton of the Bitcoin profit. It was like around New Year's, because like that's it. I had to lock in all those profits so that I can create the new core position at the start of the new year, basically. So the idea here was for 2025, I'm still expecting Bitcoin to go higher. So the idea is that, I can either go in aggressively depending where we are in the structure. At the time when New Year started, which was right here, Bitcoin, we kind of called a top. So like if I had this area drawn ahead of time. At the time, I made a video and it said next bullish target area. I had this drawn out ahead of time, and I'm like, I'm seeing strong resistance here, and we could probably go into a large correction, and that's what we did. And so during this time, in the background, it's a lot of DCA and a lot of accumulating to build up that core position, with the idea of the price going much, much higher. And then as I continue to accumulate, I did not touch the core position until we broke into this, the current bull market cycle top estimate zone. And I think I explained this in Discord yesterday. I kind of like texted about it. But the idea is that every line within this bullish fib extension is an opportunity to lock in profit on core positions. So the core positions, again, being the primary trading strategy, is simple, right? It's like, okay, what's the expected move for the overall year? Cool, that's the core position. If it's something that's not very attractive, then I may be looking at more of an income yielding asset for the year to kind of like just stabilize the living for a while. And that's more than perfect. That's more than enough, especially with the other assets going on. And then, but I'm going to get into the second part of it in a moment. But basically, the moment the price broke into the first level, which is 114.5K, okay, cool. We reached this level. This is the first indicator. Start shaving off a good portion of it. There's no reason to be super greedy when you're inside a bullish extension, because we can see a lot of like fluctuations, a lot of quick like sell-offs within it. So the idea is to use every level as a sell opportunity for that core position. So this is where I'm finishing off, where I'm rebalancing the asset before the end of the year. So I sold off some already a while ago. And now when the price reaches, if it does, I mean, I already like when you sell, you reduce your position size, you lock in profit. So if you start to see negative prices, it's not really going to it's not going to negatively affect your portfolio as much. That's the idea of it. It's reducing your position size, because the higher we go into this area, the higher likelihood of a top forming. So the further we go up into it, the risk increases. So we lock in profit, we lower our position size. It's as simple as that. Like I feel like that's quite understandable. So yeah, the next time the overall core position which will be sold, 128k is the next level to continue shaving. For the S&P, Bitcoin's like a lot easier to work with fib structure, so I don't mess with that. The S&P is simple. We're gonna start the year. Are we, if you're looking at the monthly charts or whatever, are we on the bigger picture? Are we overextended to the upside or to the downside? Cool. So am I starting the year off DCAing if we're overextended to reduce risk, and I want to buy in aggressively, even though it's going to be a 12-month long swing trade basically. But I manage either I'm DCAing, or if we're starting off discounted, then cool. We're getting towards the end of the year, so there's nothing wrong with, like, if you want to even look at it this way, like you withdraw a small portion, you lock in a small portion of profit every time the S&P makes a new $1,000 or a $500,000, or not $500 rise in the price. Like, you can automatically set these limit orders, good till canceled limit orders, to sell and lock in profit automatically, and like it just does it itself throughout the entire year. So like, you can do the same thing for DCAing as well. It's like you can set these orders to never expire, and they will just automatically fill. Like, that's such a beautiful thing. But yeah, that's the core position. It's to capture the overall move, or the overall expected move for that year. And of course, if you're doing this, how much you're putting into it all depends on your risk management. It's just a very simple explanation of what I'm doing. So I want to provide more videos to break this down. Okay, so that's the core position, right? So the idea is to capture the overall move with usually rebalancing, locking in profit, or whatever. However you see it, once to twice a year. You don't really want to touch it too much, because you want to let the position really play out. So that's the I don't know why I went tomorrow. Okay, so that's the first part of this 2-part trading strategy, and then I want to break these down into a lot more detail. Like I said, like where the first part I make like a ton of videos on it or something like that, really explaining it more in detail. Because I mean, the better you guys understand my strategy, the easier it is to understand what I'm looking for, even if I don't talk about it on a chart planning video. If I don't talk about it, you guys like, okay, but I know, he's looking at this because he talked about it in this video. So like, if you can understand what I'm doing, basically, without me really having to talk about it, like, that's amazing. And that's kind of like what I want to do, because I'm not trying to like repeat myself every single video on the same stuff. I already do that too often enough. Okay, so the second part is, when you look at the bigger picture, it's a much different it's a much different thing, right? When you look at the bigger pictures, like, these trends look really, really good. Like, if you were to, just look, and I did this to get that green bullish estimate area like a while back, and I think I did it last year, and it's still on the chart to this day. I really like how TradingView kind of saved it, no problem. But like, if you use these, if you like Elliott waves, if you like fib structure, it doesn't matter. But if you just use every single like wave count, or like every single wave, and then you keep drawing these, you play around with it until like something makes sense. Like, every time we have these swings, so like, okay, well, we use this structure. It obviously had a break of structure to the upside, and then this move down right here, this move down. How healthy was that? Did it fall into a nice retracement? It didn't. It found support within it perfectly, broke the 0.5, super healthy, and it continued higher. And it went up into the median area of this zone. So then it's like, okay, well, if it wants to extend that zone, what's the likelihood? So then we kind of go onto the next level right here, and it's like, okay, well, it shows it can go all the way up to that. And then, well, if this was a final wave within this cycle, that's quite short. It's quite short. Usually we see, you know, a little bit more of bullish momentum. Usually when the bear market starts, we see a lot more weakness inside of these candles than there is right now. So there's still some optimism. It's like understanding the bigger picture, right? So when you understand the bigger picture to understand the smaller picture, you do this like on a monthly chart, a daily chart, a weekly candle chart. It doesn't matter. But the idea is that you're making sense of the bigger picture, so that when you look at the smaller picture, you understand a little bit better. At least that's how I do it. What's really going on? So in order to give the core position strategy, which is the first part of the two-part strategy, in order to give it like an energy drink, like a booster for what it's doing, we can supplement whatever the P&L is, whatever the objective is for a percentage goal or whatever it is for that strategy. We give it a little bit of an energy drink. We give it a little bit of a boost by making short-term trades. Now these short-term trades, I am not like super aggressively focused on them. I'm not like super, because again, the the whole yearly goal when it comes to the trading income is, it's the idea is that it's coming from these assets that we're using as core position. And of course we don't completely rely on them. We use, I mean, a lot of the money I make trading goes into these income generating assets. There's no reason, or there's nothing wrong with, focusing on one thing, but having something on the side that gives you that insurance, gives you that, extra cushion, which can either save you from just a bad trading year, or it can, just give you a boost on the rewards you get for that whole year. The idea is, though, when it comes to just trading, this is supposed to supplement the core position sort of the same way that the side assets would do. But the thing is that this is supposed to boost the rewards you get. It's supposed to boost it, and it also keeps you sharp. It reminds you as you trade short term where there's weakness in the short term and how that can influence the bigger picture as well. So it all works together. Understanding bigger picture, understand smaller picture, and then understanding the smaller picture, understand the bigger picture. So what we have right here is, I mean, I really don't know how to explain it. I really want to break this down and actually like make a detailed video. But I mean, if you guys watch the videos that I've been posting pretty much every day for a while, and I plan to keep doing this for a very long time, you understand what all of this is. Like, this is a ton of stuff on here, but everything here, I always leave everything because it's a reminder to me of what I was looking at during that time. I'm trying to get better at color coding. Red is accumulation, purple is short-term deep value, yellow is like a caution area to keep an eye on, blue is a target area for like strengthening a current structure to see if it's going to be healthy enough to continue a trend. I want to get better at color coding these and like actually giving them a definition, and maybe like putting it on the website, like a page where I actually color code and give the definition of them. I think that'll be pretty cool. And then orange is like a very like no brainer kind of thing. I want to start using white as like a I think green is usually like overall bigger picture, like a target area. White is more like a like, hey, like, it's similar to caution, but caution is just, hey, we can have a reversal at this point. It's not likely, but it's possible. But even though it's not likely, but it's just something to keep an eye on, kind of thing. To not get fooled. And then white is like, we'll most likely go into this area just to continue a trend. But hopefully that makes sense. But either way, the idea when it comes to the second portion of this trading strategy, if I can summarize it in this video, is taking advantage of short-term fluctuation based primarily on investor sentiment, value gaps. So value gaps, don't always, but they tend to act as a magnet, and they also tend to act as support and resistances. We and I mean, a lot of the time they actually overlap nicely with a Bitcoin exchange heat map. But even in Mara stock, MSTR, all that, we use value gaps, and they tend to influence the price to continue into that direction until they're hit, and like it depends how significant they are as well. I mean, it can take a while to fill. Like, I mean, we had this one form back in the 9th of July, I believe, and it didn't actually fill until the 26th of August. And then we actually had one in Mara that lasted a while. But it was something I still kept track of. Like, it's just, there's no reason not to. But we had ones form back here, and this is like this is like late January, and they didn't fill, and they overlapped very, very nicely with the target extension area to take profit until like mid July, basically. So it's just something I like to keep an eye on. But the thing is, yeah, so it's value gaps is fib structures, so it just calculates investor sentiment for you. That's the whole purpose of it. I mean, there's a lot of research, available articles out there that talk about it. So there's that, and then there's understanding, in a little bit of a bigger picture view, right? So like this red accumulation, like accumulation areas are usually, and this is where I take them seriously, is when I look at a bigger picture. So it could be on the hourly chart, but as you can see, we can see multiple months right here. From the swing low, and the reason I use the swing low is because it did break over the significant swing high right here. And then it came up and it topped out nicely in a short-term profit-taking extension area. Excuse me. So at that point, I like to use this, and I created this accumulation area. And as we came into it, I also usually give you guys, I use these fluctuations in the short term, and I make sense of them by giving this extension area, and if they overlap nicely with the supportive accumulation area in red, then it just strengthens the possibility of the price going down into that area. And as you can see, the price bounced perfectly, pretty much perfectly, at the 1.618 bearish supportive extension at 107,000, or just a few hundred above it, but like that's the idea. And then on top of that, so it's not overlapping too much. I put it on the side. This is another extension, but this one was more of a sharp move. And then this one is more of a wider, more significant move. And it was nice. I gave you guys ahead of time. This was a resistance retracement from the swing high to the swing low. Likely we can find resistance in there. So they're not overlapping. I gave you guys this take profit extension area with early fluctuations, and I like the 120 moving average. The price tends to like flirt around it quite a bit, and it like tends to act as support and resistances, but it also strengthens a move. It like if it's getting ready to pop, like it usually respects it really well. And then we also look at the RSI, but the value structures would really matter. So I give you guys this one on the side, so it's not overlapping, and you can still see the numbers, but it shows that the median area of the extension also nicely 118K, perfectly with this top range, as exactly where the price maxed out at. So basically, I look at these short-term fluctuations. I look at like somewhat of a bigger picture in the short-term accumulation zones, where it makes sense to accumulate, where it makes sense to start like shaving. Right now, I'm waiting to see if we can get bullish confirmation, which we don't have just yet. But it looks like it's actually forming. I talked about this on the Discord like yesterday and earlier today, I think, as well. But we're still within this resistance area. We just got to see if short-term supports are going to be confirming a bullish structure or not. But I like the value. I really like the value. I mean, we're still below 120K. We're like, this is really good value, in my opinion, regardless, because I'm still looking at a bigger swing move. I'm not being like too, again, like the second strategy of this overall is not as aggressive. I'm just here to take advantage and make some profit on the short term. to boost, to give that energy drink to the core positions basically. And I mean, I don't put those profits into the core position. The core position, what I have is what I want to focus on. I don't actually add more to it. I have a strict rule when it comes to core positions. Like this is why I'm getting into it. This is where I'm getting out, and like this is how much I want to put into it. It's as simple as that, right? Because again, there's still risk on the core positions. Um, but yeah, we have some value gaps up here that can be filled soon. So it's possible we can just start creating like an uptrend within this area. But I'm not hoping for it. I'm just looking at what makes sense. Any short-term accumulation, because I mean the price came back down into this previous accumulation area. Yes, if it happens before and we enter that range again, I am just because it happened back here doesn't mean it's done. If we re-enter areas, I'm still gonna treat it the same. I mean, when we came back below 113k, any short-term accumulation for short-term trading. I mean, if we break this 0.5 retracement, basically 116k, like there's nothing wrong with taking some of those short-term profits. But the idea here is that we're taking advantage of. I'm taking advantage of value gaps, fib structures, these value areas in the fib structures, and then using that to like reward yourself basically. Like I mean there's nothing wrong with that. I mean I'm doing this very conservatively. I'm not like the short-term noise, like I don't care about that. There is sometimes when I'm a little aggressive and I really want to take a trade because it makes sense. Like right here I gave you guys this area. I said support will most likely break, but it's likely that we can go into short-term resistance before it breaks. So I mean I did a small trade and it was like probably like $130 profit from that one, but like it was really nice to just take advantage of these short-term trades just to stay sharp kind of thing. We didn't go as far down as you wanted to, but it still bounced pretty much nicely off of that 108 line back here. I forget to talk about these on videos quite often, but yeah, that's basically the idea. It's creating a core position which is like the meat and potatoes of the trading year, and then supplementing it with short-term trading. And you can go long or short, doesn't matter, but short-term trading is mostly based off of somewhat of a bigger picture, support and resistances using retracements from a big move, and then just waiting, just having the patience. Sometimes it takes a while, but waiting for these areas to be filled, and then you take advantage of them as long as the bigger picture still makes sense. And we're depending where we are in this bull cycle, or in the overall 4-year cycle. So yeah, I mean, I'm gonna keep trying to make these videos and break them down, but yeah, 2026 is gonna be very, very interesting in 2026, and I'm not really looking for long Bitcoin core positions. So I mean, as we get closer to it, there's still like 3 months left. We'll see what the chart looks like, and then I will keep you guys updated on that. But yeah, hopefully you guys enjoyed this video, and I'll catch you guys in the next one.